take questions at the conclusion of today's webinar. So if you can hold your questions to the end. If you look to the right of your screen, you'll see a dashboard. And on that dashboard, it says questions. If you click on that box, a little box will pop up. You'll be able to type in your questions. If you're shy or you don't care to ask your questions electronically, we're going to have our phone numbers and email addresses remaining on the screen at the conclusion of the webinar. You'll be able to contact myself or Greg and ask any questions you might have. And we apologize for not opening up the phone lines. However, when we do that, we've done that in the past, and it's always sort of a train wreck. People have background noise or having conversations on other lines or whatever, and so we're not going to do that. But we will take your questions. So you can either call us and or ask the question in the chat box to the right of your screen. So again, thanks for everybody for being here today. We're going to do two different segments of a PowerPoint. I'm going to do the front end, just kind of talk about the current state of the real estate market. Greg is then going to come on and give some very specific examples of properties that we have, give you some ideas of some of the work that we do, the rehab work that we do, along with the values of the properties that we acquire. And of course, we'll be talking about our chosen markets as well. Just some industry statistics before we get started here. I pulled this off of Forbes magazine just a couple of days ago, talking about billionaires and hedge funds, equity people, real estate investment trusts, snapping up single-family homes by the tens of thousands, and becoming essentially the landlord. And that's essentially what REO Reseller does. That's what we're going to talk about today. We are not a hedge fund or an institutional buyer. We work primarily with smaller investors who sort of understand the value of the housing market, but just don't want to do all the stuff it takes to go into, finding the home and then fixing it up and then putting the for sale sign in the front, or for rent sign rather in the front yard, and screening a tenant and doing all the things that it takes. That's what REO Reseller does, and we just sort of take the pain of secondary home ownership away, and that's what we do. But we do have lots of competition in this market now. The market's changed quite a bit. Really good article in Time Magazine. I'd encourage you to. I sent this link out 3 times this week to people that want to read this article. It's a good article. Bill Saporito, Time Magazine, April 15th. The company that they profiled in this particular article was a company that was actually in the housing market for years as an investment vehicle and got out of it. Saw the bubble was about to burst in 2006, I think it was. They got out. Then they just kind of hung around waiting for the market to come back. And now they're back heavily invested into the real estate market. A good article. This one here, I can send you the link to this one as well. I can't put the whole article up here, obviously, but this is the Wall Street Daily, April 23rd. Talks about, don't be afraid to invest in this market. The real estate market's on the path of recovery. There's no better time to buy than now. And this article profiled the idea of, when is it going to be 2004 again when prices are at their peak. So in other words, when are we going to see this peak? And we're going to talk a lot about, on today's webinar, we're going to talk about the current state of the market and, where we are at in the market today. But just to give you some statistics, just right off of LA Times and Orange County Register this past weekend, Phoenix prices are up 22.4%. This is in 1 year. So in one calendar year, Phoenix went up 22%. San Francisco, 22.2%. Las Vegas, 20.6%. Atlanta, 19.1%. Detroit, 18.6%. Our chosen market of Birmingham, Alabama, was up 17%. And interestingly, for those that live in Southern California, I live in Orange County. Orange County is now known as the most overpriced market in the entire nation. I'm not sure that's a good thing or a bad thing. And the article goes on. This article goes on to talk about the amount of money that hedge funds have pledged to housing, and the number's $9 billion, so it's a pretty big number. Standard & Poor's Case-Shiller Price Index, this is always a good thing to follow. We follow this thing pretty consistently. Recorded third quarter price is up 3.6%. National Association of Realtors is something else that we subscribe to. Talk here in this article about prices jumping 9% in 2012, which is the largest increase in 5 years. And home inventory levels hit a 5-year low in 2012. I read an article this morning. We're going to talk about inventory levels as well. But I read an article just this morning. I didn't have time to pull it off and put it into today's webinar. I'll have it on for the one hopefully today at 3. But the article talked about foreclosed home sales is at the lowest number today since 2008. So essentially, since the bubble burst, foreclosures are coming onto the market less frequently than it has been for 5 years. So inventory levels are low, our foreclosures are down, the housing market is beginning to recover. This again is National Association of Realtors. 84% believe that real estate values and number of transactions will increase in 2013. 77 believe that new construction will continue to increase. 74% believe that their local economy is going to improve in 2013, which is really an amazing thing because it hasn't been that long ago since we were all talking about fiscal cliffs and challenges with our economy and all sorts of doomsday things. And now, you know, the real estate profession, the real estate agent, 74% of those folks think that we're going to see an improvement in their local economy this year. And then no market's expected to see a decline in home values or real estate in 2013, where you saw 1/3 of those markets saw declines in 2012. And so one of the reasons we're seeing this is that, yes, we have been joined, REO Real Estate Reseller has been doing this since late 2007, 2008. And we've always had a model that was pretty consistent. Gray will talk more about our model when we get to his portion of the slideshow. But interestingly, we've seen now hedge funds and institutional investors essentially, you know, mirror what we do in terms of, you know how we identify property, what we do to get it rehab, how we identify the yield, how do we identify what type of a home provides the best investment for our clients. Hedge funds are doing the same thing. They got a criteria. They want 3 bedrooms, 1 bath. They want a certain amount of square footage. They want certain areas. They want a certain yield on their money. You know, they want to be in markets that are appreciating. Hedge funds are doing everything essentially that we're doing it. They're doing it on a much larger level. So what the question we asked ourselves was, you know, is this good or bad for REO Reseller and for our small investor? I mean, there's no question. If you Google hedge funds buying REO real estate as an investment, you'll see all kinds of things pop up on the internet. There's 47 hedge funds that I know of that are currently in this market buying real estate as an investment. There's a reason for that. When you talk to them, it's pretty clear they see a home as being a commodity, something that you're going to get great value on, that you're not going to wake up one morning and see your portfolio wiped out like we've seen in the past with paper stocks. And so there's a lot of reasons. They look at the cash-on-cash yield. They look at the appreciation in the marketplace. They look at monthly cash flow. These are all things you as a private investor should be looking at as well. What's good for my investment portfolio? And it's no different really than a hedge fund. So, you know, we ask ourselves, well, is this good or bad? We've got competition. It's forcing prices up. It's causing inventory to go down. Is it a good thing or a bad thing? And this particular article here featured 5 different things, and I just kept 3 of them that I felt was really relevant to our investor. First thing is, as I said, they're driving up prices. Prices are going up in almost every market in the country, and hedge funds certainly have something to do with that because they're pushing those prices. The second thing is they will buy undesirable property. What that does, it raises the values of the entire neighborhood. And what that really just means is the hedge funds will buy off bulk lists and tapes, and Greg will speak to that in a few minutes as well. But they will buy those bulk lists from the banks. And what that really means is they're going to buy a certain percentage of their inventory is going to be underperforming. It's going to be a home that's been empty for 5 years. It needs a lot of work, a lot of rehab work. You know, it's been vacant. The yard's been overgrown. It makes an undesirable site for the neighborhood. They'll buy those properties. Now, we don't do that. Greg will walk you through, you know, what our system is. But we cherry pick. We don't buy in bulk like that. So we don't have those types of homes in our portfolio. Which is why you'll see our yields are typically 10 to 15%, somewhere in there. Where a hedge fund, if you do some research, you'll find that these folks, and again, smart investment strategists, they're looking for yields 7 to 9%. They're not looking for that 10 to 15%. The way they see it is if you own a commodity in a market that's appreciating like real estate is today, there's nothing wrong with a 6 or 7 or 8% yield cash on cash. Now, that doesn't factor in appreciation of the property. I'm talking about a simple monthly cash on cash ROI. So that's the second reason. Third reason, and maybe the most relevant to a small investor, is they're providing an aftermarket. There's now buyers in this market. If you bought a home today, whether from us or from somebody else, and you wanted to sell it in 6 months, you can be assured that there are people in the market that are buying homes as an investment vehicle. And so the hedge funds really do provide some stability for the industry as well as it continues to assist in pushing the prices up. I pulled this off CNBC over a year ago now, and I still like these quotes. I think it's really relevant to see where we've been and where we're at and where we're going. But this goes on to say, while home prices haven't hit bottom nationally, well, we have now. We have hit the bottom. We are not in in that at the bottom of the market any longer. Every statistical analysis you'll read will show that the market is climbing back up. Demand is starting to grow. That was true. It certainly was. But to such an extent, we saw, Blackstone make a statement in their earnings conference call in October saying that they were buying $100 million worth of homes per week, which is a staggering number. So demand certainly did grow. And especially for distressed properties at the low end of the market, and I draw your attention to that because that's an important quote. Anybody buying secondary real estate can ask the question, where do I buy at?
Hey, Charlie, I don't know if you can hear me, but we can't hear you.
Okay, is that better, Greg?
There you go.
Okay. Did you hear any of that, or did you miss all of that?
Last thing you said was about Blackstone, and their intent was to buy.
Okay, yeah, I was saying Blackstone. It wasn't their intent to buy, actually. Blackstone actually made an announcement on a conference call in October that they were buying $100 million worth of inventory a week. And so we've seen those, large investors in the market. And then I want to draw your attention to where it says, especially for distressed properties, the low end of the market. I think that's where I might have got cut off. That's always been our market. And people always ask us, why are you in Birmingham, Alabama? Why are you not in Southern California? It's just the yield. Greg's going to talk about that more at greater length here in a few minutes. But interestingly, our model, which was always the low end of the market, is the same model that the hedge funds use. And there's some comfort in that, to know that our strategy was always right on, that when hedge funds and guys that get paid lots of money to figure these sorts of things out say the market is the distressed market at the low end of the market, well, that's what we said all along. So we feel pretty good about that. Then talk about large-scale investors like hedge funds getting in. That certainly did happen. And then how does an individual investor get in? Retirement funds. We do at least 2 webinars a month. I'll be sending out some advertisements in about early next week on 2 webinars we have coming up later this month with 2 third-party administrators, AccuPlan and UDirect IRA. They'll be talking about ways you can invest in real estate by using your self-directed IRA or 401k. Strong strategy. I won't go into the reasons why. Join us for those webinars. We'll talk about that. So with that, that's my presentation. I'm going to turn it over to Greg now. Sorry about the glitch there. I hope you didn't miss too much of that, Greg. And,
no, it's funny. Just so everybody knows, we've been having problems back and forth. So Charlie, let me know if I cut out for any reason.
Yeah, I will. I'll hit my mute button too while you do your presentation. Again, a reminder: we're going to take questions at the end of the webinar. That doesn't mean you can't type your question in right now. If you choose to do that, we'll answer the questions at the end of the webinar. And thanks for being here. And Greg, thanks for being here as well. And I'm turning it over to you.
All right. I appreciate everybody being on the call today. We all have busy schedules. I'm just going to go provide some basic information. I'm kind of going to breeze through our normal webinar just so we can get to, I know a lot of people are very, very, very interested in the property of the week, but we do have some new people on the call, so this might be redundant for a few of you. It says here that we started in 2008. It's actually 2007. We incorporated in 2008. We were definitely way ahead of the foreclosure boom. It wasn't very profitable the first year in 2007, but as a market, because people just they weren't ready to come back in. And the last 3 years, it's been extremely well, just because people are more inclined. And literally as we speak, these hedge funds that have invaded and driven up prices in many other markets, they're at our front door right now. So there's just a lot of excitement going on. It is absolutely the best time to buy. Really, even if you don't buy from us, and you're going to find out a lot of reasons why you should, but definitely get involved in real estate. Definitely get involved with something along the lines of this model. Like I said, we're still at a comfortable low, even though we did go up substantially, in the last 24 months. Everybody's predicting that these homes are really going to go through the roof in the next 6 to 18 months. Anyways, we are a one-stop shop for investors. What we try to do, if you don't know anything about real estate, you're definitely in the right place. But the more you know about real estate, the more that you will appreciate all the things that we do so that you can get involved in the foreclosures, but not have to deal with all the little nitty-gritty. You can go to the next slide. Yeah, this is just a quick announcement. A lot of people wonder how they get on our list. If you don't know how, we acquired Home Traders not too long ago, a couple months ago. And Home Traders used to be the largest real estate blog in the United States. The owner of that blog actually works for REO Reseller. We'll talk more about him a little later. You can go to next. All right, we're going to spend a couple minutes on this page. This is all really, really, really important. I cannot overemphasize this. When we go into an area, you know, we do a lot of research. And if you want any information about Birmingham, we've got a lot of it. You can go on the internet. But the more you'll know about Birmingham, you'll understand why we're there, okay? Now, we have a lot of people, I don't want to call them competitors, but what they do is they just broker houses, okay? They don't have, you know, people on the ground or any physical presence. You may have a company, you know, in, I don't know, Los Angeles that is selling homes in 15 different states. Well, they don't really have any presence, okay? We actually have ground crews that go out and look at tons and tons and tons of properties constantly. And, you know, it says 100 out of 100 we look at where we get only about 10. That's really getting down to about 5 now because, you know, anywhere you look, you know, inventory's down. So, you know, these deals are going to be harder and harder to get. Our business model, which I'll talk about in a couple minutes, probably will not be around or be sustainable in any time between now and the next 6 months, but I'll explain that in the forward slide. But the bottom line is we have presence on the ground. They actually go in, they look at the homes. We have three different crews go ahead and bid out the property, so we know what the repair costs are going to be, on and on and on, okay? We also have an excellent management company. I mean, we're a full-blown presence on the ground, okay? We target neighborhoods where the rents are high and the resale values are consistent. In this case, they're going up like crazy. Our average home that sells for around $50,000, I'll tell you right now, rents out, the average is $735 a month. We buy foreclosures, REOs, bank owns. You know, we don't. You know, it's very rare we actually get a home off the MLS. If you understand what I'm saying, that's where a lot of, you know, other companies are going. We even have relationships with banks where they show us their properties first that meet our criteria because they know we buy. Because there's a lot of tire kickers out there, and a lot of them will put offers on properties. Then they'll go look at it, and they know that if we're putting an offer on a property, we're buying the property. Like Charlie says, we don't buy bulk lists, tapes, anything like that. Our selection is, you know, it's very, 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 very specific, okay? It says we buy based on the yield, not on the comp. You know, a lot of these neighborhoods have been really killed as far as their values go because there's so many foreclosures, but yet there's so many people, you know, who still live in their homes. And we are still finding neighborhoods where, you know, there's all these different companies like Zillow and Trulia, and on one street that they may show 10 homes at $60,000, $70,000, $80,000, and then they'll have homes on there that are supposedly worth 10, you know, 15 and 20. And so you really have to have the presence on the ground to be able to know what that house is really worth. And the bottom line is it's reverse engineered. In other words, if you get a house that rents for $735 a month, you do the math backwards, know what you're paying for the house. Most of the people that do something similar to us, you know, they're happy to get 7-8%. Our average client in the last 12 months averaged 12% in monthly income on their house, and also saw a 17% increase in the value of their home. So our clients, if you look from today and go back exactly 12 months, they made 25% on their money. Okay, we can't guarantee that that is going to be consistent, but I would tell you for the next 12 months, it's going to be way up there also. Okay, and of course, like I said before, a lot of our clients, they just want to use their retirement funds. They're leery of the stock market. They can't afford to, get nothing on a CD or an annuity, and but they really don't want to be involved. And we provide a fully managed system where, whether you want it short-term or long-term, we're there to assist you and act as your intermediary. You're not going to deal with landlords. You're not going to deal with tenants. You're not going to deal with all these things. That's what REO Reseller is all about. We're full service. I think I've said enough about that. Let's see if there's anything else I want to say. Oh, and one last thing about that last slide I should mention. These homes in about 2005, just to give you an idea, on the very, very low side, they were worth about $90,000. On the very, very, I should say very, very high side, but 170. There were a couple that were in the 200s, but right there in the middle is what these homes were worth in 2005. Now we know they're not going to go back up to there overnight, but everything comes back to supply and demand. So you can go to the next one. All right, this I can't overemphasize this slide either. Why buy in Birmingham? Okay, we're going to talk about Birmingham in just a minute, but I want to just make the math easy for everyone. Okay, you can sit there. I get a lot of phone calls for I want a home in California, Nevada, and Arizona. Well, I can tell you, Arizona's been just priced like way crazy. Vegas has bounced back. It's very hard to get inventory. They're paying over. And like Charlie said, he's in Orange County. And Charlie, if you can come back on a minute before I get into these numbers, tell everybody what you experienced recently on those 6 or 7 homes that someone wanted us to sell.
Yeah, and it's actually interesting, Greg. I recently got another package in California with the same kind of numbers. I mean, people do have both packages to sell in California, and they are out there. But as Greg's going to go into here in a minute, from a numbers perspective, and here's the reason why I talked about earlier. People are focused on the lower end of the market. I had one package of 7 homes in Santa Ana. I still have them. They're $399,000 per home, so almost $400,000 per home. The rents are between $1,200 and $1,400, so it's like about a $1,300 average or somewhere in there. So your yield on $400,000 is $1,300. So the yields are just extremely low. I received another package just yesterday in San Bernardino, California. Homes are $200,000. They rent for a little less than $1,000 a month. So you can see the yields are completely different for what they're selling these homes for. So with that, Greg, you can go through the numbers now, what we do.
Yeah, thank you. I appreciate that. The example I'm using here, based on actual numbers coming in, maybe we should change the slide up a little bit because it's a lot worse than this slide is showing. But the idea is you spend $499,000 on one property in California, Nevada, Arizona. The average rent is going to be about $22. It's definitely a little lower than that. But the point I want to make is by the time you pay your taxes, which are substantial, the insurance and the management costs, you may have 6% cash flow at the very, very, very most. You may be negative. You may be just breaking even. So you go 1 month without having that home rented out. You're definitely in the negative. And there's a lot of statistics on these 3 states, and the bottom line is it's just right now it's not a good economic deal. The idea is compare that to buying 10 properties in our current market for 10 for $49,900 each, $500,000. Our average house rents out for $735. I just put down 7, but you're left with $7,000 a month, and by the time you pay property taxes, insurance, and everything on that, you're going to be really close to about high 4s, low 5s, in rent. And in addition to not just the cash flow, the appreciation factor is way greater in our market. And there's one other thing I was going to say. Oh, and diversity. I feel it's better to own 10 of something than put all your eggs in one basket and just buy one. You can go to the next slide. All right, let's talk about Birmingham a little bit here. A lot of people don't know. They're actually pretty shocked. I was actually shocked when we were looking at, we were in Jacksonville, Florida, and we wanted a little bit more bang for our dollar. And we researched a lot of different areas and stuff, and we decided on Birmingham. And I can't tell you enough about Birmingham. If after this webinar you want some information, just email one of us. We've got tons of stuff. You can just go online and look. But here's what some of the big boys are talking about. CNN Money is basically saying that Birmingham is the 10th best overall real estate market in the United States. They're also saying that Birmingham has the third fastest growing real estate market in the nation. New Wire Investor did a study, and out of the best cash flow markets in the United States, Birmingham was third. Okay. As far as revitalization, economic development, I mean, Charlie, if you want to chime in, I always forget the statistics on this, but basically the Better Business Bureau they're seeing literally just millions and millions and millions of dollars coming in for infrastructure, new baseball stadium, the parks galore, and I always make the joke, I mean, they've overbuilt this thing so much that, I mean, they have these community facilities that are so massive they could literally house a mini Olympics and stuff. It's just absolutely amazing. And the downtown area is being revitalized, restaurants, like it says, did I go out for a minute?
Yeah, just for a split second there, Greg, you're okay.
Okay. I don't know why we're having these problems. Anyways, just a lot of great things to say about Birmingham. The more you know about it, the more you'll be attracted to it. You can go to the next one. All right, Charlie, I'd like you to do this slide.
Yeah, I just pulled this off just a couple days ago. This is actually pretty new, but the Birmingham Center for Real Estate, or the Alabama Center for Real Estate just made this announcement in April. This sales prices were up 2.8% in February. That's a pretty big jump for 1 month. This chart down here is interesting. The green bars here represents sales amounts, and the little red squiggly line here represents inventory. What's interesting is if you look where the market in Birmingham peaked at, it peaked right here in 05, 06 is when it really hit in 07, and then you start to see this gradual decline of home value prices. Now you see it start to go back up, as Greg mentioned, from 11 to 12 we saw a 17% increase from 2011 to 2012. So you see the market start to climb back up, and already in 2013 it's already up over 2012. So we're going to end up somewhere up in this ballpark by the end of 2013, if not higher than that. But what's interesting about it is look at home inventories. Obviously 2003 extremely low, 2005 low, and then the inventory starts to climb back up, and obviously it peaks out in 2008 when really the foreclosure boom, bubble hit us. But then you see a gradual decline. So as prices are starting to come back up, you can see now where home inventory levels are at. They're back here right, 2005, 2006 levels is where they're at the moment. But inventory levels is dropping, and so does that mean prices are just going to go up. And the values of homes are going up, but what it's costing our restart to buy a home is going up, obviously. Now, many of you know that in 2012 we were able to stay pretty consistent at our sales price of between 42 and 49,000. 42 to 49 was our average sale. I think was 44.9. That was our average property we sold. Some of you who are on today's webinar know that price has now gone to 49. We do not have a 44.9 model anymore, unless we have one home left, Greg. I don't know.
No.
Okay, so the one we had at 44.9 is gone. So everything now is at 49.9. So we're seeing prices go up. I think all that really means, I think it's a really good time. You look at statistical history in the real estate market, and really across America throughout history, very consistent. You see these sorts of bubbles that you have, these peaks, and then you see these craters, and then you see it climb back up again. That's pretty consistent. It's not like the stock market that goes all over the place. It's pretty consistent. And what you're seeing right now, you're seeing prices begin to slowly go back up.
Yeah, if I can say one more thing about that slide, it doesn't take a rocket scientist to realize everything in economics fundamentally comes down to supply and demand. and the demand to live in Birmingham is very, very good. But now you can see with that red line, inventory is getting lower and lower. You know, there's possibility of these homes going up just so dramatically and so quickly. Well, I'll shut up and you can just go to the next slide. It'll make more sense when I get there.
Just real quick, Greg. The statistic you were looking for was the Better Business Bureau announced that in 2012, Birmingham experienced 3 times the amount of investment dollars pumped into their economy than in any single year in their history. So 3 times the amount of investment dollars into that economy. Now, that's not just in real estate. That's in industry. It's in everything. It's across the board. But 3 times the amount of investment dollars into Birmingham in 2012, 3 times greater than any year in their history.
All right. I'm going to go over our basic models. In the last couple months, we've offered different tiered products because we do deal with a lot of industry professionals too. Our Tier 1 product, every one of these homes was handpicked as I showed or as I talked about a few slides ago and went through the same process. I mean, we really, you know, with the ground teams and everything, we pick phenomenal homes. Okay, so this one's handpicked. The $29.9 includes the closing costs, and it's in a great rental market. It'll average $735 a month in rent. Okay. However, let's go to $39.9. The $29.9 just is not rehab. It's for industry professionals who want to do it on their own. You know, they want to try to do it, you know, better than us, or just people like to buy properties and rehab them themselves. If you're not a professional, I don't recommend this at all. There's a lot of things that go wrong. I mean, you know, we've got things down, you know, pat, and we get surprises, you know, every other day on things. Now, the second one for $39.9, this is rehabs, okay? So, you know, you can figure out pretty much, you know, what the rehab costs right there. The rehab to rent ready condition. And I just want to say that we do go above and beyond. We're going to show a couple pictures, several of them, before and after, so you can get a taste of what we do. And then, Charlie, if you go to the Tier 3. Okay, Tier 3, you know, if you know nothing about real estate, or even if you do, you'll really appreciate what you're getting for the $49.9. If you'll notice, it's the same home. And I just picked a random example, okay? Again, it's handpicked, went through the same scrutiny on all our homes. Covers the closing costs, the great rental market. It's rehabbed to rent-ready condition. Okay, but here's the differences. At $49.9, you get a 1-year warranty. Okay, this is not a home warranty like you're thinking that, you know, fixes appliances and stuff. This covers anything that goes wrong with that property for 12 months. I've been using the same example, and I will continue to. This is the worst case scenario. Okay, and it's only happened once, but you should be aware. You know, we had a home. Oh, I'm sorry, let me back up. As far as repairs and stuff, most of the repairs are in the early stages. Usually after it's occupied is when you start finding out. Most of it's water related. No matter how good of a job you do to inspect them, inspect the pipes, replace plumbing, on and on and on and on. You don't know how perfect it's going to be until after a tenant has been in it for, you know, 1, 2, 3, 4 months. And so a lot of the repairs happen in that period of time. I think it's been a month and a half, 2 months ago now. We actually had and again, we look at these houses closely. We had a main sewer break. I mean, it pretty much caved in from the pressure, because the house was vacant for a long period of time. Local contractors wanted 12 to 15 grand to fix it. Our own ground crews fixed it for $6,000, but that expense was covered under this 1-year warranty from REO Reseller. Now, in addition to that, during the rehab process, or if somebody moves out, we pay a monthly rebate that is actually pretty close to what your net rent will be And we do that, again, in case something happens to the house. It's extra insurance to know that, especially in the first few months, getting the kinks worked out, that you don't have to worry about those things. And then, of course, we pay the taxes, the insurance. We do put on a home warranty. Now, that covers things like, appliances, interior. It will cover, interior plumbing, but it's a lot of the smaller things. Something like a outdoor or a foundation issue or something like that. They don't touch that type of stuff. And then the best part is, the property is completely managed. We've got a phenomenal property management company that we interact with daily. You don't have to deal with them. You don't have to deal with the renters. You don't have to deal with collecting the rents, anything. So the property is completely, fully managed 100%. You can go to the next one. All right. I want to mention that there's no hidden fees in here. A lot of people get surprised. It includes title, escrow. There are no commissions. Everything is covered. So if it's $29.9, it's $29.9. There's nothing additional. Whatever we're quoting on this webinar, there's no additional fees. And one other thing I want to mention, because we get asked this all the time. If you're interested in one of our properties, you don't ever send money to us. Okay, and if you're looking at any other properties, don't ever send it to anybody else either. We deal with one of the most reputable title and escrow firms in the United States. They're primarily in the southeast, fourth of the country, and it's Fernley McDonald. They're one of only 3 title and escrow companies that are approved by FTC to do their liquidations. They literally do thousands of transactions, probably more than that, every month. So I just want to understand, if you're interested in one of our properties, it's just like buying the house across the street from you. You go to a title company, you open escrow, et cetera, et cetera. Same thing here. You can go to the next slide. All right, this is where I get a little excited because for people on the West Coast, like I am now too, it's hard to imagine buying a house for $50,000. And a lot of people think, wow, it must really be, ugly or nasty, and they're not. I'm going to show you 5 examples just to show you an idea. Now, some of these are 2 years old, some of them are literally a month old. I just randomly picked them just to show you examples. And the reason I'm telling you that is, I know this one was sold quite some time ago, and it shows fair market value 55. It's more than that now, but I just want to show you pictures. Okay, so you can see a nice tree-lined street, nice neighborhood. You can see the rehab, nice new cabinets, nice hardwood floors, good paint job, on and on and on. A lot of times, we have to rewire the house or replumb the house, whatever it takes. We know what we're doing. But if you go to the next one, okay, this one is one of our higher renting ones. I don't feel it's as pretty in the front, but what do I know? I'm just kidding. But, this one's got a beautiful kitchen. You can see the bathroom's been completely 100% redone. Beautiful hardwood floors again. Just a really nice house. You can go to the next one. Again, here's another one, okay? This is just our standard typical house. Kitchen's been redone. You can see, again, real nice job. We try to refurbish the hardwood floors if it's got them. If it's not, just a side note, we never put carpeting in homes anymore. We only use a high-grade linoleum type, kind of like the fake hardwoods, and we use those, and you'll see a picture in a minute of some other product that we use. But it just helps for maintenance as far as anybody moving in, moving out, and keeping repair costs to a minimum. Go to the next one. Okay, well, this one's a monster, and again, I swear I just randomly chose them. Again, nice house, nice family neighborhood. You can see the pictures. We went with red on this one, and there's other rooms in the house that are like the new mustard yellow type thing. But again, I just want to give you an idea of what these houses look like. You can go to the next one. Okay, this is an actual example that has happened in the last 30, 45 days. Okay, This particular house, I mean, you can see it. It's still okay looking. Okay, the reason I'm showing you this is I'm showing you some before and after pictures. You really can't tell in that photo, but the kitchen's a little bit beat up. The back porch was all slanted. There's a couple things wrong with this and that. But Charlie, if you don't mind going to the next one. Okay, this is the after pictures. You can see the better pictures, but you can see, that's a nice kitchen. That's a nicer kitchen than a lot of homes in California have. You can see that I'm talking about the flooring. Okay, this is the in thing. People like this. I may not, but people like this. You can see in the kitchen we go with a high grade vinyl, but in the other rooms that's a high grade linoleum. And you can see redone bathroom. You can see the paint job. Obviously, we got rid of all the pink, purple, and blue rooms. And, of course, on the bottom right there, there's a brand new air conditioning unit. And you can also see the backyard is absolutely huge. So I just want to give you examples of, what they look like and just an example of before and after because I think a lot of people get a little weary when they're looking at something, for $50,000. All right, this is what most of you have been waiting for. I do want to tell you there are two very, very, very interested parties in the home. I just want to disclose that. I know one of them is on the line right now. I know you're there, man. But I still have to show it. This is our property of the week. We're going to start featuring different properties, one per week, maybe two per week, of what we feel is really just an unbelievable deal that is outside the 9 dots of our very stringent, narrow, $29.9, $39.9, $49.9. Okay, all of these will go well or will go fast. I just want to warn you there. But if you don't get it on this week's, there'll be another one next week. But I will say, I feel this is the best value, and I'm going to go over it in Birmingham for the price. That's why we sent out the big, learn how to steal this home. All right, you saw the front. This house has got phenomenal curb appeal. It's an all brick home. I'm just going to point out a few things. If you look at the bottom right, this particular home is more in the historic area, okay? That is a church right there. And there's parks to the left, parks to the right. It's just a really nice area. I will say this is the nicest home. It's not the nicest, but it's the biggest home. That bottom picture, that's actually a garage, which is rare, believe it or not, in Birmingham, but it also has a studio above it. And again, that's the back, just to show that it's all brick. You can go to the next one. Now, I'm showing everyone these pictures because I want to give you an idea. This house, the only reason this house is still around is because a lot of companies, they're looking for homes that need, a few grand or 10 grand or 15 grand, worth of rehab. We have the experienced ground crews, but I will tell you, this house is more expensive to rehab than the actual home itself. So I'm showing you some ugly pictures to give you an idea. You can see how beautiful the rooms are. They're big, big rooms. Kitchen's a little ugly. If you look at the kitchen, you can see there was a water leak that's caved in. This house has been vacant for some time. You can see that stairway on the left is pretty messed up. That's a picture of the attic on the bottom. But again, nice spacious rooms, beautiful house, great bones, great foundation, brick, et cetera, et cetera, et cetera. You can go to the next one. I'm showing. The thing is they're supposed to get uglier as we go. That's another on the top left. That's another water leak that happened. You can see the tile. I mean, that is just so dated. But you can just see it. The point is, this house is in disrepair. That bottom right, by the way, that is a sunroom off of the master bedroom, which would make a really nice den or a sitting area or this or that. And again, look at the bottom left, look at the windows. I mean, it's a beautiful house. And then the bottom in the middle, that's just another picture of the attic. That's about the best we could do with the lighting. You can go to the next slide, Charlie. All right. So I wanted to show you the pictures and go over this numbers-wise, okay? There's two fairly accurate ways to get values on homes in Birmingham that are pretty consistent, okay? Now, this house has been vacant for some time. So, oh, by the way, before I even get into that, the house is currently a 3-bedroom, 1.5 bath. There is a large, I call it a den, we'll say, that would be converted, separated out, with a door, and has plenty of room for a closet. So that would be converted. We would make it into a 4-bedroom, and then the half bath. There's another bedroom downstairs. We're going to take that and make that a full bathroom. And then you also have the studio, in the back, which you really can't count as a bedroom. But, it's 4 bedrooms plus the studio, plus 3 baths because you got the studio in the back too. Okay. Again, keep in mind, this house has been vacant. Zillow is fairly accurate. They're an analytical tool that looks at homes in different areas. They're actually starting to advertise on TV. But the bottom line is, in its current state, Zillow still estimates it at $96,000. Okay, as is. That's pretty high. Okay. In addition to that, you can go to the Jefferson County Tax Assessor's website, and I pulled it up, and there's a very easy way to do the math to figure out what current value is on the home too, and they had the house again in current condition for $116,000 or $114,000. All right, if you can go to the next slide, Trey. Okay, the purchase price on this home, we're going to sell for $109,900. Okay, the main home will easily generate a $1,200 a month income. That's based on the neighborhood, the house itself, and I think we're being very conservative with that number. The studio, which believe it or not is extremely desirable, is only going to rent for, we're guessing, $250 a month. It might be more, but we just want to show some pretty conservative numbers. The taxes, the insurance, the management fees, the net ROI on this house is going to be close to $1,200. Okay, if you do the math, that's a 13% ROI. That is absolutely phenomenal in the marketplace. But here's the big kicker. Okay, because the house has been vacant for some time, it's hard to assess the actual value based on the homes in the neighborhood. This home will have an after repaired cost. After rehabbed value of probably somewhere between $150 on the low side and $175 on the high side. So not are you only walking into really awesome numbers on the monthly rent. Birmingham's going through the roof. The appreciation on this house, this is the property of the week. If you're interested in it, the way we're going to do it, it's first come, first serve. I know you're out there, man. Sorry. We'll talk after the webinar. But it is technically still available. Let us know if you're interested. If you are interested in this, and maybe it's a day or two late or whatever, like I said, we're working on 1 per week, sometimes 2. We're going to leave our contact information up there. You can call us, email us. If you want that information on Birmingham, we just have tons of information to share with you. We're not going to bug you. We're only interested in people that want to talk to us. With that, Sean, you can, go ahead. Sorry if I got a little overexcited, everyone.
Okay, we're going to go ahead and take questions. So if you have any questions, again, if you just click into your question the question box on your screen on your dashboard there. You can type your question into that box, and we'll take questions. I'm going to hit my mute button just so I can check the queue, Greg, so I'll be right back.
All right.
Okay, Greg, we got one question. How do I find houses for wholesale?
I'm sorry, what was the question?
The question is, how do I find house? Yeah, how do I find houses wholesale?
Oh, are we talking one, or are we talking a lot of them? I mean, I think we're very clear on how we get them, but you know, we have a strong presence on the ground. There's a lot of different ways to find them, but the absolute best way is to have, you know, boots on the pavement, knowing neighborhoods, and getting, you know, selection to offhand deals that aren't on the MLS, especially now because the ones that are on the MLS are being bid, and a lot of times they're getting over asking price. You want to add anything to that, Charlie? I mean, we, you know, we're in that market. That's what we do. I would suggest a one-on-one phone call, you know, to see kind of what you're looking for.
Yeah, I was going to say there's actually ways to answer that question. The one way is, if you recall, we had three tiers, tier 1, 2, and 3, and on the first tier, that property at $29,000 is really a wholesale property. We're just putting on a small profit onto that for us, and we're going to flip it at $29,000. So when we can help you identify homes without it being rehabbed or rented, if that's what you're looking to do. The second part of that question is, candidly, if you're going to try to buy wholesale in this market right now, you almost have to find a wholesaler. If you go out there and try to work the MLS or work the off-market properties and through whatever channel, it is so competitive out there right now. You've almost got to find a wholesaler, which is somebody that identifies properties, writes offers on properties like a madman, and has properties come available as his offers are accepted. You can just step into that vacuum and just make it, you know, buy a piece of property. But that is not easy to do either. So I think what Greg said at the end there is probably most applicable, and that is give us a call. We'll talk to you about some options that you might have based upon what your criteria is. Because remember, a lot of that has to do with where you want to buy, how much do you have to buy, you know, what's your strategy. So if you contact us, we'll kind of point you in the right direction. The next question is, any financing available and how much you need to put down? You and I spoke the other day on the phone. Since that, and I've been meaning to get back to you, Carlos. The reason I haven't is because we've been investigating some options. We think we are really close to a really good option for financing. If you can just into the chat box here, type in your phone number and give me about an hour and a half, and let me give you a call, and I'll run some scenarios by you. And a lot of that will have to do with what you have to put down, you know, what you're really trying to accomplish. We're not complete with this process yet with a possible lending group, but we're really close. So again, give me your phone number. I'll get back to you later on.
All right, and Charlie, I really wanted to add something to the other question. I don't know who you are, but if most people, even experienced, go into the Birmingham market right now and get you the same type of quality house for that $29,900, I can guarantee you it's going to cost you at least $37,000 to $42,000. Are there any other questions, Charlie?
No, not yet. But I'm going to stay here for 1 second, Greg. If you want to bug off, that's okay. I'm going to, we do have another question. I want to get in the real estate business. I'm in Houston, Texas. How do I get in the business with no money? Wow, that's a great question that I have no answer for. You know, there's all kinds of symposiums, workshops, seminars, webinars you can attend where these guys are going to teach you how to become a millionaire with no money by using other people's money. I don't know what that formula is. I have no idea what that is. I don't know whether you do or not, Greg. I tell you, this is a tough game with no money down. I'm just being real candid, and I'll tell you why. We talked earlier in the webinar about the amounts of hedge funds and real estate investment trusts in this market. You know, when there's inventory out there, people are buying them up, whether it be an REO reseller type of specialized REO company or whether it be, you know, Blackstone. There's just a lot of money in this marketplace right now. So if you're looking to do something, well, I can give you the answer to that question. Actually, if you're looking to do something in the real estate business and you have no money down, I say the only way you can do that is by getting owner financing, which essentially means you need to find somebody looking to sell a home but doesn't want cash for it. They want to get payment over a period of time. And that's not easy either. That's a trick, but that would be the only methodology that I'm aware of. Greg, you got anything to add to that?
Well, you know, I just want to add to the fact, too, in today's market, if somebody's offering owner financing, it's been my experience in the last 12 months, that's typically somebody who owes more on their house than what it's worth, and they're trying to sell it for a higher dollar amount. In addition, a lot of these, there's a couple companies out there that are doing the rent to own, you know, or rent with the option to buy. Again, typically these homes, they're overpriced. You know, so I just warn you to be really careful. But I mean, if you want to have a conversation after the call, I'd be happy to. You know, to kind of, you know, point you in the right direction.
Yeah, I think that's it. Carlos, I do have your phone number. Again, give me an hour or there. I'll give you a buzz back and we can chat. I want to.
Sorry, go ahead.
I want to thank everyone for being here. And again, our numbers are on the screen. You can call us at any time, myself or Greg, with questions. That's what we're here to do. And we have another one of these today at 3 o'clock Pacific time if you care to join us, and we'll be doing a few more next week, I guess, as well, too. So, and also what we're going to probably be doing is I think we're going to do our houses of the week only once a week on Tuesdays. We'll be doing something different on Thursdays. And the reason I'm saying that is we had the one on Tuesday with this one property and weren't prepared to load in another one, and we should have done that because I think we've got this one committed. So if you're interested, give us a call. We'll have some other stuff available for you, and we look forward to talking to you, Greg. We'll see you at 3 o'clock.
All right, and Ryan, I know I owe you a phone call. I will call you later this afternoon or evening.
You said okay.
Okay, good.